All right. Welcome everyone to another episode of the Bentley Real Estate Group's Students of Real Estate podcast. Today we are joined by Bentley alum Gregory Bonomo of TA Realty. He's joining us today, and we are really looking forward for him to join us. So Greg currently works at TA Realty here in Boston in asset management, but I'll pass it over to him to kind of introduce himself a little bit more.
Greg Bonomo, TA. I was a finance major at Bentley. I was in the real estate club. I kind of knew I wanted to do real estate. I think when I was a junior, I had a couple internships in like a corn grain commodity trader, actually, like my freshman, sophomore year. And then my junior year, I got an internship at a company called Cushman and Wakefield, which is a big real estate services company, which is a good place to kind of get first jobs and internships because they're large. Cushman Wakefield, CBRE, JLL, Colliers International. Those are the kind of the big services firms. They do a bunch of stuff, appraisals, brokerage, both capital markets and leasing, property management. So I got an internship in Boston, the Cushman office in Boston. That was kind of a definitely like solidified that I wanted to do real estate. My brother got into real estate when he graduated from Babson. So I kind of followed him into that, but had that internship. It was great. And then my first job out of Bentley was with a short-term debt firm called UC Funds, which is also located in Boston. Definitely like opportunistic lending, I'll say. High interest rates, high returns, shorter term debt, bridge, mezzanine, preferred equity. So a different level of the capital stack, but definitely some cool like old hotels in like some tertiary markets like Birmingham, Alabama, converting them into multifamily. We were the lender, not the owner, right? So it was definitely cool to see that, and definitely like the opportunistic nature of it was pretty cool. So did that for a couple of years, underwriting, and then a little bit of asset management, which is a little bit different on the debt side than it is on the equity side, which is where I am now. Then saw a job at TA Realty, and I kind of didn't know too much about TA, but TA is an institutional investment manager for real estate. So big pension fund, endowments, sovereign wealth, all these big institutional capital allocators that need to invest money in real estate as they look at their kind of pie of investments. Insurance companies, usually like in the past, it's been like 5 to 6% of an allocation to alternative investments, which is real estate. That has since started to grow. Again, I'm talking kind of generally, but the institutional investment in real estate has grown. And if you move that a little bit across the whole world of investors, right, you're talking a lot of money that has been flowing into real estate. So TA has been around for about 40 years. I came into TA on the disposition side, and the kind of the life cycle is raising capital from these investors, right? Acquisitions, so going out and buying real estate, and then asset management, which is in the middle, which is where I am now, which is basically operating the real estate, executing the strategy, and then dispositions, which that's where I started here, which is selling the real estate. So that's the life cycle. And the real estate, I mean, warehouses mainly and apartment buildings. Those are the two big holdings. Then there's data centers, some office, but not so much anymore. And then grocery anchored retail centers. So those are the kind of five food groups that TA invests in. The disposition side was definitely transactional, a lot of contract negotiation, dealing with brokers, hold sell analysis. Have we executed the strategy? Should we sell? Should we not? And then I ended up leaving, kind of going over to grad school to get my master's in real estate. That was just an opportunity for me to kind of pick my head up a little bit. Got my master's in real estate development from MIT. They have a specific 1 year, 1.5 year program. And then I came back to TA in the asset management. And I think I kind of wanted to do that because it was a little bit like more hands-on of the real estate, actually executing the strategy versus the kind of transactional side when I left TA the first time in the dispositions role. I know that's a long-winded answer, but I feel like that's kind of maybe what the point is here to kind of talk about how I ended up where I am. So yeah, that's how I got here.
No, yeah, that's great. That sounds like, you've definitely touched your feet in a lot of different aspects of the industry and it's kind of all built up. Um, Kind of a lot of the viewers here are going to be, Bentley students and me and my co-host here, Fabian, being seniors here at Bentley. We're kind of just interested into kind of what Bentley was like as a school when you were there. What was your academic career like and kind of what kind of things do you think Bentley taught you that has helped you throughout your career?
Yeah, I think that you're around a lot of like-minded people, right? I mean, it's business specific. Yeah, that's the big draw to Bentley. It's a smaller school, but business specific. So you're at least around a lot of people that want to do generally the same thing, whether it's whatever facet, but it's business, right? So that's the first, right off the onset, you're around a great peer set, which I still have the same core 20 guys that I went to Bentley with, all live in Boston, all have different jobs. Some are in New York, but we stay super close. Like that was great. Granted, you're in a suburban town of Boston. At the time there was no limit on the amount of male friends you could have at Bentley. That's what one thing we had back in the day. I mean, it was like a 60-40 guy girl ratio. You know what I mean? A bunch of like washed up high school athletes. That's the profile of my friend set. But all of us in kind of real estate, or excuse me, in like finance, mainly finance, management, marketing, a couple marketing. Um, so that was a great opportunity. One thing I wish they had more of, which I'm sure you guys probably share this, is like a real estate specific kind of curriculum. So we had the real estate group, which is what me and a couple other friends of mine that are also in real estate now kind of had access to, like you guys are doing, which was kind of great to get exposure to. We took a couple classes, but um, I think the people that wanted real estate, it was tough to figure that out without having family members in real estate or having internships in real estate. That was kind of definitely something where there's like room for improvement. But the best part about it for me was coming out with one, the Bentley degree, right? The background in finance. And then, to be honest, the friend group and all peers in similar industries is huge positive.
Yeah, that's great. And you kind of touched on it a little bit about your involvement in the real estate group when you were here. But what kind of exposure did you get to real estate, whether it was at Bentley or beforehand, that kind of got into your head and you ended up making that decision to enter this industry? And was there anything at Bentley that, specifically about the group or classes you had, a professor you met, that kind of helped you finalize that decision to enter the real estate industry?
Yeah, so I think what always I say that like people that are at Bentley is like trying to get that internship exposure like as much as you can. I know that's difficult sometimes when you don't have real estate background or experience on your resume, but that's what the club does. And the club also gives you an opportunity to do what you're doing right now, which is calling people that are in the business, starting off with alumni, just getting some feedback, having them come back to Bentley to like do speaking, all that kind of stuff. And that's your exposure, right? Um, when I was there, I think I had an internship when I was in high school, actually, and it was a grocery anchored retail developer back in New York, where I'm from. That was like the start of it. Came to Bentley again, junior or freshman and sophomore. You don't really have that much access to those classes. I think I took one. It was like some real estate investments class. Some people took, there's a real estate law class. A couple years prior to me, there was a minor for real estate, but they got rid of it. So those internships kind of helped me figure out that I wanted to do it. I ended up cold calling Cushman Wakefield my junior year to get that internship. Like I sent out physical letters to a bunch of shops, tons of emails, phone calls. They ended up calling me back saying, actually, we do have an opening. So it's almost like trying to take any tactic you can to try to get that internship. The group was kind of non-existent when I was there. And so that's when me and a friend of mine kind of took the opportunity to like, we didn't make the group, but we brought it back that couple of years we were there. And again, that was the big key for us to be able to talk to groups that we were interviewing at or networking with, like what we're doing in real estate. And I got to say, looking at you guys on LinkedIn with the real estate group, definitely stepped it up since we were doing it. So that's great.
Yeah, we're
Great.
trying to give more exposure to students in the real estate sector because
Yeah.
now there's only, I believe, one class in the whole like school in Bentley, and
Yeah.
it's called Real Estate Investment Decision, and that's the only class that they give about real estate. And for me personally, when I started college, so my freshman year, I didn't really know that there was all this side of private equity in real estate. Like I just didn't know that. My dad is an
Yeah.
architect and like he showed me a little bit about the business, but I thought it was more about, the brokers or and just selling residential, but I didn't know there was such a big sector. So going off that, what I know you said you didn't really know a lot about TA when you applied, and you talked a little bit about what TA does now. So you said you focus more on work workhouse, I mean warehouses and like apartment buildings. So what initially like drew you into TA and then coming back to TA after your MIT?
Yep. Yeah. So when I was applying, there like wasn't even really a website. It was very odd, but I started to ask around people kind of in Boston, like about the company, and then as you do a little bit of more research, kind of understood that it's been around in Boston for like 40 years at this point, so whatever it was back then. And around that time in the 80s is actually when this whole private equity real estate thing kind of really started picking up. And basically taking real estate, commercial real estate as an investment vehicle, securitizing it into like funds, et cetera, right? That it's really only 40 years old, which is not that old. It's not that old for being, real estate is forever, but forever old. But the actual institutionalization of it is not that old. So this firm was kind of one of the beginning players in that. So that was a big tell. And then, I didn't know too much other than the fact that there was like this old Boston firm. So luckily kind of took the leap of faith. And since being here, leaving to get the master's degree was really for an opportunity for me to learn a little bit of a different side, the development side, because I didn't really have that much here. Um, so once I left, I had new peers, right, that are a little bit older, had a little bit more specific real estate experience. And I think realizing from them and their stories and the companies they worked for that TA had a lot of unique things about it. One, it's been around for a long time. Two, it's well capitalized, never having a problem raising capital because of how it has performed in the past. And the capital is the lifeblood of this business. So, and then lastly, like the partners here, a lot of like mentorship is a big thing. So, and that's something that if you have the ability to choose, between company A and company B, and company A has like a, strong mentorship kind of culture, and it takes a little bit to figure that out, but you always choose company A because that's something that, a lot of the partners here have been here for like 20 years. So they've been in the business for maybe 30, but they've been at TA for 20 on average of the partnership. I mean, that's a statement about what this place has got going on. And there's a lot of products. And by products for TA, I'm like companies in the private equity world, I mean like value add fund, right? Or a core fund or a core plus sector specific. And what that means is that's all basically what types of returns the real estate spits off. So for value add fund, it's going to be a little higher of a return, a little bit riskier. Maybe that's some vacancy leasing up, or that's adding some capital to reposition an apartment building and have more amenities. For a core fund, that's like you're buying a Amazon warehouse in, right near Manhattan, right? So it's very stabilized, lower return, but lower risk. Some of that core plus is maybe in the middle of that. So maybe an A location, but some risk on leasing it up. So that's kind of how the products work in the private equity world. And again, the investors are investing into TA, but they're investing into one of these products because they want a specific risk return profile on their real estate investment. And that's what we do. So
Okay, yeah, it sounds like TA, well, they've been there for over 40 years. They know what they're doing. Um, you have that unique special characteristic that you know like the market up and down. You have good mentors, like you said. So what makes you successful in your position, and what like traits do you have that maybe someone that wants to be in your position right now? Like let's say I want to be Greg right now in asset management, and what traits do I need to be successful as you in that position?
you- like a constant curiosity
Okay.
of, because that's really what's going to be in the pursuit of learning more and learn more and more and more and mess up and learn from it and learn like that. Senior level people that I've come across really respond positively when they know that you actually care and want to know more about what you're doing, right? So that's like number one. And number two, as simple as this sounds, likability. Like, you could be the smartest person ever and not be likable. You're not going to succeed as much as you got to be, somewhat smart and very likable. You know what I mean?
Mm.
So I really think people kind of forget some of the soft skills because you're so focused, you're studying, you're doing your finance and everything. And then where do I go next? And I want to crunch numbers. And that's all what you should be doing. But having an ability to, you know, have people like you means they care, means they'll mentor you, means that you will grow. So curiosity and likability.
Nice. So yeah, that's great advice there. Um, so now what what are you guys doing now? Let's say what projects are you working on? What do you see in the market? And let's talk more about the market trends here and specifically in Boston. What can you tell me about what you guys are doing as of this moment?
So TA covers basically the whole country. Specific markets. It's not all markets everywhere, but it's specific markets throughout the country and across all those different product types, across all different asset classes, right? So I cover industrial in New Jersey, and then I cover a couple of multifamily apartment buildings in Florida and in Nashville. So I would say just generally, some of the headwinds for both of those asset classes has been oversupply in certain markets. In the last, call it 5 years ish, right? I mean, from an industrial warehouse standpoint, we've seen this crazy expansion of e-commerce, right? Which has resulted in a lot of people developing a lot of warehouses. Now we have a lot of supply that we're trying to get through. And then from the apartment multifamily side, similar, a lot of people started entering into that space because they've been seeing kind of the stats and the metrics on how longer people are renting apartments, how much longer it takes them to buy homes. So everyone kind of starts to then want to invest more into multifamily, and then you see a lot of development and thus a lot of supply. So those are two kind of headwinds that we're battling right now. And we think that the fundamentals of those two asset classes are very strong in the long term, and they have been in the past. But it's just something where me in asset management day to day, I'm operating these assets and I'm dealing with some of that, some of those headwinds. So that those are two things I would say I'd probably mention.
Okay, and yeah, I wanted to focus a little bit in the multifamily apartment in Florida. You said what part of Florida are you referring to?
Fort Lauderdale and West Palm. I don't know why I
Okay,
just had a little question mark there. Yes, those are the two locations.
and are these more like value add types of deals, or are these more opportunistic? Do you work with developers, and or is it more yeah, core value add type of
So
deal?
one of them is a core deal that we just bought, really big deal. Garden style, which is again very difficult to now build that type of style. A lot of the construction is in these kind of mid-rise wrap buildings. So the garden style is kind of a little bit older product, but it's what people kind of want, that less density, right? It feels a little bit more like a community. One of those is in our core fund. It has its own strategy. And then another one is in our open-ended core plus residential only fund. And it's a little bit more like light value add. So, doing an exterior paint upgrade, adding some pickleball courts, upgrading the gym, the volleyball court, the playground, maybe doing a little bit of things in the unit. So not too much, but a little bit, right? To try to get a little bit more rent and stabilize some of the occupancy there. So those are kind of the two different strategies, right? One is a little core and kind of less risky, but maybe less upside. The other one is core plus, so a little bit riskier, but a little bit more return, right? So those are those two. And then we have other ones that I don't work on, but I think we have like 7, I believe, in Florida.
Nice. And how's the demand there? I know there's a lot of talk about a lot of people moving to Florida, a lot of in New York, and what's the demographic that you're looking at the data there and seeing, okay, yes, this makes sense to invest here, and let's say a few $100s to the each unit to make sure the investment makes sense.
Yeah, so there's definitely, over the last, I don't know how many years, but a push and into the Southeast, both from an investment standpoint because of where the demographics were going. And that's kind of where we've seen a lot of positive growth for the firm, a lot of positive returns. So that's kind of where and it's not just in apartments, but it's also in warehouses, right? And the demographics, they kind of change property by property. Like that one reference I had, that core deal is an older demographic, right? So more affordable, or they have the ability to afford more, but they maybe don't want the maintenance of a home. The other deal is not as older of a demographic, more of a mid-range, maybe a couple, maybe single working, or a couple, maybe have a kid, maybe not. Those are a little bit more sensitive to home purchases, right? When home purchases are pretty expensive and they were definitely a cheaper option, we might have an ability to kind of increase rents when we do improvements to the property, right? There's more demand for our units because of the amenities. So that's kind of how it depends on the market, depends on the sub-market, the location, what the strategy is.
Yeah. I think that's one of the things that attracts a lot of people to real estate is kind of like every market is different, and every investment's different. There's different demographics, different criteria. And I think that kind of adds a lot of a very unique layer to real estate. And also, like you mentioned earlier, it requires those curiosity. You got to have that drive and be able to adapt to the different criteria of that investment. So I think that kind of leads to the next question that I think is good for our listeners to kind of understand more about asset management specifically. Um, what's kind of like your approach to, managing these properties and trying to find ways to either create more value, reduce expenses, and meet those goals that, your TA and their investors set out, and then you guys have a very strong track record of hitting. Kind of how do you take that approach and from start to finish, you get a deal that ends up to you. What's the first step you're taking on trying to find those different pockets to increase value?
Yeah, so the fun thing in asset management at TA is, like I touched on, a lot of we do a lot of different assets, right? And we have a lot of different vehicles, funds, right? That all have different executions. And the fun part about that in asset management is that means that I have a bunch of different strategies that I need to execute on. And things change. When we underwrite and buy a deal, things change real time. Asset management is like the real time situation, right? So if it was, we were going to buy this building, this warehouse, and it's vacant, and we're going to go find a tenant, right? That's the easy example of how to add value. As soon as you put a tenant in there and a lease, that building increases in value significantly, right?
Mhm.
If it's an apartment building and we're going to buy this apartment building, we're going to do the exterior paint, we're going to add pickleball courts, we're going to update, and we're going to then increase our rents to kind of justify that investment. So that's another value add, right? expenses on the multifamily side, very important because those come right to our bottom line, right? So we have a lot of tools here of how working with operators to really hone in on expense management, not only revenue, but the expense side, right? On the warehouse side, expenses, they matter, but they are paid for by the tenants, triple net leases, right? So that's a positive to the industrial sector in general. Now, granted, you want to make sure that your expenses, if a tenant is looking at two buildings, they're not going to want the one that has the higher expenses. If it's the same rent, they're not going to want to have the one that has the higher expenses if they're hypothetically in the same location. So it's definitely something to consider and to like keep tight because you're still trying to market to a certain amount of tenants. So capital upgrades, leasing, a lot of it is leasing from this standpoint because we don't do too much development. But again, huge value add on taking a piece of land and building a warehouse or a multifamily building on it. There's your value add there, right?
Yeah.
There's where you're seeking your return. So I would say, yeah, the leasing, the capital repositioning, those are really the ways that we try to and adapting to the market when it changes,
Yeah.
seeing opportunity, relationships in the market. Someone knows someone that has a tenant that's looking for a building. We want to make sure we're friends with that chain of people, right?
Yeah.
And that takes a long time, not just me, but TA as a firm and a reputation in all these markets. So yeah.
Yeah. And, I'm assuming that with each property, depending on what fund that it's in, there's different strategies and just overall different characteristics to those deals. So I was just kind of curious if there's maybe a specific type of property type or a certain fund that you like to work with the most that you find the most enjoyment out of.
So I would say like just deal specific. We closed on a 31 building portfolio in New Jersey a year ago, or a year and change ago, in our 13th value add fund. So it's 31 buildings. It's about 45 tenants, and it's all like smaller, older warehouses. So we're talking like 5,000 square feet to 20,000 square feet. And it's a bunch of them all in this sub-market in New Jersey. New Jersey next to New York, a 1 day's drive from maybe 50 million consumers, right? So New Jersey has always been kind of a major market. So we got this portfolio and it in itself, even though it's one investment for us, is its own little micro portfolio in a bigger portfolio. It's got redevelopment plays strategies, right? It's got lease up strategies. It has capital infusion strategies, unique disposition strategies. How do you sell it? Do you sell it all together? Do you sell it in pieces? Do you sell it single building? Tons of tenants. I mean, this one is definitely the most interesting one that I have right now. And it's because it's got every piece of a value add story for warehouses within it. And I'm able to kind of work with it, work internally, externally. We have a partner on the deal. So it's definitely when we finally sell it, it will be one that I'll remember probably for my whole career.
That's awesome. That sounds like, kind of reminds you of like you're building like a Lego piece or something. There's so many different pieces, and at the end of the day, it all needs to come together and be unified and work together. And I think that's one of the coolest things about real estate is, if you ever get the opportunity to work on a deal like you just mentioned, that sounds super cool. Um, so kind of just, as we end the year, it's been a wild one, I think, for a lot of, for the real estate space, a lot of moving pieces, different things changing. Um, so how do you kind of review this year? What are some of the highlights, maybe some lowlights? And how is your viewpoint going into 2026 looking like? And is there something, a new sector, a new strategy that you or TA looks to be implementing as we go into the year? Just kind of overall, just a reflection of the year and outlook for the future.
Think it's definitely been interesting. And I think that we've maybe, I don't know if it's been 12 months or 24 months of definitely some like I was talked about before, that supply, right? On the warehouse side and on the apartment side, multifamily. I mean, it's been interesting day to day to see the changes in some of these markets. And I think that's a big thing that's happening kind of quickly was some major changes in some markets that historically were great. And all of a sudden, over a couple quarters, the data starts to come in and we need to kind of adjust. But that takes a lot of presentation from me, boots on the ground in the market internally to senior members here, like, hey, listen, things are changing. I'm seeing this in the data. We got to be ready for this. We got to play a little bit of defense, right? Or maybe get offensive earlier, right? So that's been definitely something this year that's been interesting. I mean, the Liberation Day in April with the tariffs has caused ramifications. I mean, I cover New Jersey. It's the largest port on the East Coast. We have a bunch of assets in California, in Long Beach, right? And I mean, because I cover there, and there are ramifications up and down the coast, obviously, but I've definitely felt it from a velocity standpoint. Talking to tenants, understanding them hesitant to expand or pay more in rent to lease a brand new building with more square footage. I mean, they've been apprehensive, and understanding how we can keep them and make sure they don't leave. You know what I mean? So I think there's definitely more wood to chop next year and kind of seeing where everything lands. But now more than ever, do I think that relationships with tenants matter, understanding the market fast, making sure that the people we work with in these markets, the brokers, are feeding us information real time so we can make decisions. But I don't think, not that I'm a pessimist, but I think more of a realist that I think there will be some interesting times next year in the long term. I think we are always going to be buying things online. I mean, we are a consumer nation, world, but the United States, I mean, a huge portion of our GDP is just consumption, so warehouses and apartments. I mean, these are always going to be asset classes you're going to want exposure to.
Yeah, I think that's very, very good information. And I think the past year has, and even past couple years, have forced a lot of players in this space to reevaluate their strategies and shift completely I mean, how they operate. I mean, you see developers are super hesitant to build now, but that's affecting the current supply. And then we have interest rates, which is hurting the lending side. But as we see rates to start cut down a little bit, it's going to be interesting to see how that changes that side of the business. So it's really cool to see all the different factors that actually affect the market cycle. But I think you're right in that realistic viewpoint that, you can't be too optimistic, but it's maybe a little bit unrealistic to be so negative about where we are as a market.
Yeah.
Yeah, and you talked a little bit about this, about mitigating risk. So you talked about making, doing your research, looking at the market. So you have to be aware about what's happening in the world, and let's say there's each market is different, but each have they complement each other. And let's say yeah, the market in let's say New York goes down, but then a lot of people go to Florida, so Florida goes up. So you have to be aware of those factors. And I wanted to ask you if there was any time or any moment that, let's say, in let's say a value add deal that you thought, oh, let's implement this to add value, and then at the end it didn't add the value you wanted to. So let's say like, there's a lot of not failures, but in real estate, you have to try again and try again and see what fits, what doesn't. So
Yeah.
have you had any particular like moment or that you thought that, oh, I'm gonna add this to this building, and then it didn't get the expectations that you wanted to? And I don't know if you can talk about a moment.
So part of this portfolio I was talking about with a bunch of deals, smaller buildings, we had a bunch of older spaces, right?
Mhm.
Then we had a decently sized space kind of sitting vacant for a little bit. So the thought was, okay, do we just wait for a tenant to come and take this space as is? Do we wait for them to come and maybe we can give them some money to change it up a little bit? But it's a good good space. It'll be fine. We don't have to spend any money right now. Right? Okay, good. We don't have to spend money. A year goes by, no spending money, no spending money, vacant, vacant, vacant. It's like, okay, we got to rethink about this, maybe change the strategy. Okay, that space is 15,000 square feet. Well, what's the demand for 7,000 square feet tenants? Oh, well, it's way higher. Okay, well, we got 15,000. What if we split it? So we split it and we got two. And if we can now capitalize on maybe a demand, a segment of the demand that's hotter than the other, right? Well, that takes a lot of money. So are we willing to invest in here? Well, I got to run the analysis. Here's how much we're going to invest, right? If we put this money in, here's the rent we're going to get. If we get that rent, we now can say that this building is valued with these rents instead of the old rents, which were lower on this 15,000 square foot space. So get the approval to spend the money to split the space. Now I have two 7,000, sure enough, leased up both of those within 6 months at much higher rents than if we had the 15,000. So now we've proven out we've proven out above what we thought it was going to be. That building is now valued significantly more just by doing those two leases. Because now if I go to lease another space in that building, I can say, well, listen, I just got these rents over here. So now you got to pay me this rent. And then again, every dollar in rent, there's a calculation of what the value of the asset is because that's the income stream. I mean, that was a way where a failure of an original thought process forced us to rethink some things, invest behind that idea, and luckily executed on the strategy and had that building valued more than if we just leased it to a 15,000 square foot tenant.
Yeah. Yeah, nice. That's a great example of using your market research, seeing, oh, you have, of course, 7,000 square footage. It's more in demand. You did your yield on cost. Let's see how much it's going to cost. Let's see how much yield can we get. And at the end, it was successful. So that's great for you and good thinking. But I want to move a little bit to some advice for Bentley students because this podcast is mainly for Bentley students, and
Yep.
there's not a lot of resources in Bentley for real estate. And people that know about real estate, they don't know there's this huge sectors about funds and core plus and all the private equity. If you have to give an advice to a student that doesn't know a lot about this real estate space but wants to get in, what kind of traits would you say this student needs to be successful in this profession?
You don't have to be persistent, right? Especially if you're getting into real estate, which I think everyone should get into. I'm biased, but it's the best industry you can get into. There's a
I think
lot
we
of
can all
things
agree.
to do. Yeah, right.
You
There's
agree?
a lot of things to do. And if you're finance, if you're management, marketing, accounting, I mean, it's everywhere. If you want to go to the debt side or the equity side or the brokerage side or whatever, there's so many places you can go. It's only growing, right? You just got to be persistent with the networking, which Bentley students usually always do, right? I mean, you guys are doing it now. We do an event in April, and it's called Breaking into Private Equity Real Estate. And undergrad students, I think you said you came, right? Yeah.
I was there. Yeah,
So
I can highly recommend.
yeah, yeah, and we do outreach to students, and we got like 180 students sign up, 30 people come. Now I get it. I was in college too, and Bentley's a little in Waltham, so it's a little tough. We usually have a good Bentley showing, but it just goes to say like those things, that's low hanging fruit. You come, you meet somebody, you follow up with an email, right? You just keep that going and sending an email or a phone call to someone and not genuinely wanting to know, like, hey, how did you get to where you got? People love talking about themselves. How did you get to where you got? What do you do? Any advice for me? Not necessarily, hey, you work at this company and I saw an internship there and can I get that? How do I get that internship? Right? I mean, framing of how you're leveraging the network is important, but making sure you're using it. I mean, I love you guys offering this right to me. I love to be able to see if this helps somebody. I got other people at Bentley. We get people that are interviewing from Bentley, whether they're older and years after Bentley like me or new for analyst positions or internships. I mean, all the Bentley people that are at the office, we're all talking like, oh, we got to get these guys in here, right? Whoever they are, right? I mean, it's a collegial nature I mean, from being at Bentley and us in the real estate business that came from Bentley that are in Boston or in Miami or wherever. I mean, we want to help people out, but it's on you guys, whatever, not you two, to reach out, stay consistent and persistent, and just really want to understand, like, how do I get in? You know? So
Yeah.
that's my 2 cents.
Yeah, so yeah, you have to utilize your Bentley alum network. You've talked about it a lot and how you connect with your friends and you still have your core friends and Bentley is a small school but strong and
Yes.
I see that every day going to campus and everybody has like a vision, like they want to do something. Um, and that's something that I really I'm proud of Bentley
Yeah.
because sometimes I say, "Oh, I'm from Bentley," and people don't know the school,
Yep.
but then when they know Bentley students, they see they're a bit different.
Yep.
So yeah,
Keep
I
that
don't know.
pride.
Huh?
Keep that pride though,
Yeah,
because used to go back a lot more than now. I have a kid now, but I used to go back a lot more to like talk to the real estate. I remember going like every year. I would for like 5 years, right? Going back, talking to students, doing the round table things. I mean, you just have the passion in it because people that maybe don't know they want to get into real estate, that exposure is limited. So it's almost like a rite of passage that you got to help give that exposure to the next class. And I got to say, I went to grad school, obviously, and I talk more about Bentley than I do where I went to grad school because that's where it started and that's where it starts, you know?
yeah,
So, anyway.
that's great. And yeah, you talked about the opportunity in TA that you guys do in April. And does TA offer any other opportunities, any for college students or grad students?
So, definitely, I'll probably email you guys too. I'm going to send out. I think it's in April, so that you guys can kind of post it if you can. But that's for undergrads. We only do internships for graduate students. We don't do internships for undergrads, but we have a TAP program, which they talk about at this thing in April, which is our analyst rotational program, which we do hire right out of undergrad. So, and that's kind of new. It's very new to TA, but even hiring out of undergrad is new to TA. So and we have maybe like, I think we have like 4 TAP analysts right now and looking to hire more. We advertise it. It's on the website. So it's definitely something where, as long as it's always talked about, like at Bentley, right? TA Realty has an analyst program, and if we do it every year, you guys are talking about it. People are applying. People are reaching out to the Bentley people here to have a conversation, understand that. So I think that's a positive I can say now being here versus when I started here, there wasn't really a program for right out of college. So
Yeah.
definitely something to always watch out for.
Yeah. For any viewers who are interested in connecting with TA or any other firms in Boston, highly, if you have not already, subscribe to our campus groups so we can send out that information. But yeah, like I mentioned earlier, I went to the event my sophomore year, and that was a very eye-opening experience to a lot of aspects of the industry that I didn't know existed. And I think a lot of people don't know that either. Fabian touched on it earlier that, I kind of was like him that, oh, it's kind of just like brokers and agents just selling and buying real estate, not much to it, but there is that huge institutional level that TA plays in. And it's a great place to be. There's a lot of good benefits of working in this space, and I think that, if you're a curious and driven person, that you'll find a lot of success here and enjoy what you do. And I think you can say the same, Greg, and agree with that statement. Correct me if I'm
Yeah,
wrong, but
yeah, absolutely, absolutely.
yeah, it's gonna wrap us up for this episode. Thank you for listening, and thank you, Greg, for your amazing time and insights that you're able to provide to us. It's awesome being able to talk with Bentley alum about what we love to do and what we want to pursue in our futures. And I really hope that you people viewing are able to take a lot from this podcast interpret that information and do what you want with it. So thank you, Greg, for your time. So yeah.
Awesome. Thanks, guys. Appreciate it.